Welcome to Investors Insights. Our topic today, pause or refresh. We have clients asking a lot of questions. The world is not dull right now, and we've got a lot of information to share with you on this blog. I'm joined by my distinguished colleagues, Trey Booth, Ty Miller, and Bobby Norman. We wanted to address topics, your concerns, as we have conversation one-on-one with our clients and all the emails that you've been sending us. So with that, Bobby, the world is an interesting place right now, and geopolitics is a question that everybody's asking about, a topic. So show your charts, give them the information. I was really impressed with what you had done with that.
Yeah, so we continue to get a lot of questions and concerns regarding the conflicts going on around the world, whether it's in Ukraine or in the Middle East, where the world is awaiting Israel's response to Iran. So we're also getting reports that North Korea has sent soldiers to fight in Ukraine on Russia's behalf. So, when and if Israel goes after Iran, it wouldn't be surprising to see the market show short-term volatility. However, when it comes to the current conflict between Israel and Iran, the markets have largely ignored the conflict, a lot due to the fact that we're seeing positive corporate earnings and a healthy economy. So I want to go over how conflicts and war impact the markets. And the best way to do this is by looking at this chart that shows the impact of geopolitics on markets that includes wars and invasions. And so looking at the average, which can be seen in the blue line in the chart here, the average conflict causes short-term volatility, but historically the markets recover the next 12 to 18 months. There are, of course, examples of extended wars where the market had larger and longer pullbacks where war occurred during times of economic weakness. But overall, the market is going to be more impacted by corporate earnings and economic health. So we're analyzing the conflicts around the world that's going on right now carefully, and we'll keep you updated on the impact on the markets here.
Yeah, very much so. Through our blogs, our social media, phone calls, one-on-one podcast. You're right, Bobby. We will keep everybody updated. But as news sources continue to talk about this, it causes uneasiness for people there in the community and throughout the country. But that said, Trey, you tied into what Bobby was saying because of the word pause. That's why we used our terms today for the topic, pause or refresh. Is this a time to pause, or do we just refresh and we're moving forward?
Yeah, Greg. So we're definitely seeing a lot of data come out from the economic community that's showing there's a pause from the U.S. consumer and the business community. And what's important is, is this a temporary pause and we're just kind of getting refreshing, or is it a more permanent pause and that would lead to a recession? So some data came out recently about the U.S. manufacturing sector is in a contraction in the month of October. So that's a negative data point. We've seen in the recent jobs data shows that hiring is falling off severely. The good news is firing is also falling off. So what's that telling us? Companies are just not making a decision. They're not hiring new people, but they're also not letting go of the people they have. And so that's why you're seeing unemployment remain relatively static, which is good news. And then on the consumer side, the National Federation of Retailers is expecting a 5% decline in Halloween spending this year. Now, as a person at our house, I know Boots on the Ground Research, that's not true. We are spending much more than we are last year. But nationwide, it appears that there's been a drop. And that's pretty rare. Usually, even in recessions, as long as they're not severe recessions like 2008, we see how holiday spending always go up. And in an inflationary environment, you would absolutely expect to see it go up. So that kind of shows us that the U.S. consumer, U.S. business environment, they're not stopping, but they're just kind of pausing. They're at a waiting pattern. That's likely due to the U.S. elections, the Middle East tensions that Bobby's talking about, and the weather events that we saw over the last month. That causes consumers to kind of pause and see what's going to happen, and businesses pause and see. There's not as much data around election pausing as there is with natural disasters. The data around natural disasters shows that while there is a pause in the immediate aftermath, there is a resumption and a catch-up on the backside. And so if we see this pause and it refreshes consumers' balance sheet, we see corporations, once the election is a binary event, after it, we'll know the outcome. And so companies will know who's in office, and they'll make a decision accordingly. So we expect to see the refreshing of this, and we'll see on the back end things improve drastically. If not, then you get in this negative feedback loop where you're waiting for a decision, or you're waiting for things to get worse, and because you pull back to try and get ahead of that, then that supersedes and then causes things to get worse. And as hiring gets worse, then consumers pull back because they're worried they're going to lose their job, which causes hiring to get worse. And you have this negative feedback loop. And so if this is just a pause, then we should see that feedback loop break, and we should see a resumption of growth on the back end.
Yeah, no, very insightful. I thought that tied in well with what Bobby was saying. There's a lot going on in the world, and people are watching closely. And but at any moment we could see things change, and this economy that's all of a sudden we're seeing some pause issues taking place. It could turn around and refresh very quickly. Another topic, Ty, that continues as well to be asked is about inflation.
Yeah, one topic we've been focused on and will continue to be is this kind of last mile fight against inflation. Our research partner Strategas outlaid actually 6 kind of areas to focus on, for inflation purposes here to keep an eye on. Of course, the Fed has shifted their focus on employment right now, and we feel that inflation is over for right now, and it's certainly paused. But we don't want to hit refresh on inflation, of course, and typically, that has been something that happens. And so the 6 talking points here are historical precedent. As you can see, historical precedent here. Anytime that you have inflation over 6%, 9 times out of 10 in the past, it has come back. Now it may take a year or 2 or 3 to come back, but we've seen inflation kind of come back, as you can see in this chart. And right now we're in that pause phase, we're in that lull, and so it's going to be interesting to see a couple of years from now how we're going about it, especially as fiscal and monetary policy kind of go against each other. The second reason that inflation could come back, pent-up demand for wages. Workers always feel like they kind of got left out of that initial inflation surge. Everything goes up in prices, but I'm not getting paid more. As that changes, we've seen more strikes. We've seen a lot of unionization coming back. The wages may increase, but then that could be another driver for inflation. Point number 3, deficits. Of course, we're operating at a deficit here. That makes the Fed's job certainly more difficult when it comes to fighting inflation. Number 4, decarbonization. Certainly a great theme and something that the world is certainly focused on. But right now, it's more expensive than the traditional use of getting oil out of the ground or whatever it may be. Number 5, deglobalization is something that I really want to hit on. That's one issue where both parties, Republicans and Democrats, agree that we're going to take a tougher stance on, and deglobalization is here to stay. China is no longer a friendly trading partner. And as you can see in this chart, which I found really interesting, the group of 20 countries, this is their trade restrictions from 2009 to 2023. Back in 2009, there were a couple dozen, 20, 30 or so trade restrictions in place among these group of 20 countries. We're over 2,000 now, just in 15 years basically later. Over 2,000 trade restrictions. It's amazing how popular this theme of deglobalization has become, and how common tariffs and trade restrictions and import restrictions, all of this is becoming, it seems like a theme that's here to stay among the world. And then number 6 is immigration. Certainly getting more people into your country can lower inflation for a time being, but as those people stay, typically, they're going to want credit, they're going to want, different things. And all of a sudden this inflation, demand goes up, inflation can spike again. And so those are the 6 talking points we want to focus on as we go forward. Now, this topic right now doesn't seem, to be, of major need, but it's something that we're going to keep our eye on moving forward, as again, this can happen 1, 2, 3 years down the road, and something we're going to want, just to keep an eye on.
No, that's well said, and great information. As I like to say, is that every year we navigate through the circumstances, the obstacles that are thrown our way. There's positives to look for regardless. What we are saying today is pause or refresh. We're looking to see over the coming weeks as to how these particular situations start to pan out. And we're going to keep everybody updated. We're going to be looking at the financial blueprints. We're going to be looking at portfolio strategies. and in multiple ways communicate with you. So don't hesitate to call us. We love talking to you. We thank you also for forwarding this blog to friends, family, and colleagues. We've gotten questions from them as well. We hope you continue to have a great week, and we look forward to keeping you updated. Remember, every day we're striving to see to it that our clients' lives are better, richer, fuller. And this is one of the ways we do it, by making sure we provide you information so that you can stay on top of the facts, the data, and the knowledge that's out there. Have a great week.